when we think about insurance, we obviously think about the larger insurers and the brokers that make things happen, but there's a very big community, there's a very big ecosystem which consists of cell captive insurers that also maybe cater for the lower end of the market or people who don't necessarily have access to advice as much as everybody else. I'm talking to Peter Jennett, who is the CEO of Centriq. He's very passionate about cell captives, and we're just going to maybe talk about cell captives and their role within the financial ecosystem. Peter, thank you very much for joining us.
Great, thanks for having me.
Let's talk about cell captives. Has there been an increased focus on cell captives over the past 2 years, and what role do cell captives and what benefit do they play within the financial services ecosystem?
Yeah, so I think it's important to realize cell captives are just like any other normal insurer. Okay. Now, we do have this added benefit that we can issue preference shares, and that enables guys to inject capital into our license and then write business and receive the risks and rewards of that business. So I think we're seeing a lot more demand from guys, especially in the alternative distribution play, to try and access a license and bring good, solid product into the market.
So what is the future of cell captives? I mean, if somebody had to come to you today and say, look, what is the future of cell captives over the next maybe 5-10 years, what would you say to them?
Yeah, so look, we think that there's a lot of legs to run still in the cell captive arena. So, I think for us, insurance has traditionally been in the hands of the big insurers and the traditional insurers. So we're seeing a lot of alternative distribution players, retailers, etc., talking to us saying, guys, we've got a lot of access to market. We're able to distribute product in a very low cost manner. Let's design products together that add value to our customers and put it into the market. And this partnership with retailers, etc., enable us to deliver product at a very low acquisition cost into the market, and that's a great advantage.
Is this not maybe a disruptor for the industry? In an industry that is now plagued with disruption, isn't the rise of cell captives maybe challenging larger insurers? And is it a positive or is it negative challenging?
So I don't see it necessarily as taking business away from the larger insurers. I think we're bringing in new product. We're able to protect some of the lower LSMs because of the low distribution cost, where previously the traditional guys haven't been able to provide a product in that market. So it's actually enhancing the industry. I think it's helping the economy. We're actually protecting assets and again writing insurance premium. So we're growing the economy, and I think it's not necessarily disrupting the industry, but it's adding value to the industry.
Awesome. Peter, thank you very much for joining us.
Great, thank you.